Hey everybody, Pat Logue, Prudent Financial Planning, certified financial planner and certified student loan professional. Today we're going to start a series of videos to talk about financial planning. What is financial planning? What are the different aspects of financial planning? The 6 main areas of financial planning are investments, retirement, tax planning, insurance planning, education, and estate planning. There are various subtopics inside of each one of those that we can delve into. But to get started, we want to answer some of the basic questions that we get from a lot of our clients. We work with a lot of young medical professionals, and we get questions like, what is a mutual fund? What's an ETF? What's a balance sheet? So we're going to start out the basics, and we're going to go all the way through everything. We'll make these short, concise for you, so you get some good information in a short amount of time. To start out, we're going to talk about where do we start out in a financial planning process. We'll look at your balance sheet first. So the balance sheet is going to be made up of your assets minus your liabilities. And we get questions about what's an asset, what's a liability. Assets, we're talking about bank accounts, checking account, savings account, could be your investments. You might have a simple IRA, a 401k. Those will all fall under assets. Now, if you purchase a home, the home is an asset. Your mortgage would be what's known as a liability. So when we're looking at assets minus liabilities, this will lead us to your net worth. And the net worth is a good starting point for where you're at right now. That just tells a picture, tells a tale of where you're at now. Our goal is to help you grow your net worth. That's our only goal. We don't have any alternative agendas or anything. We just want to help you grow your net worth. So that involves growing your assets or reducing your liabilities or a combination of the two. So assets, like I said, could be a house, you might have a car, the car loan would be the liability, and we're going to look at everything in tangent to see what your net worth is. Another liability would be a student loan. A lot of medical professionals, you have $100,000, $200,000, $300,000 or more of student loan debt. When you first start out and graduate, don't be surprised if your net worth it's going to have parentheses around it. It'll be negative 200,000 or more we've seen to start. So when we're working with our clients, we want to help grow that number. And what's a good number to reach is a question we get a lot. To start out, we want to get you out of the negative territory. So however fast we can get that to happen, we'll work on that. The next goal will be work on something. Let's just say the goal is to get to $1 million. You want to have your net worth, you want to reach $1 million as fast as possible. I think that's a good starting goal. Looking at your specific goal would take more time and effort to determine how much you're going to need in your retirement years. Work that backwards and figure out how much you're going to need when you retire. We can work on all that. This is just some basic stuff for the calculations. So student loans will help you repay that. That might involve going through refinance. It might involve working on an income-driven repayment plan. There are various aspects that might work best for you there. So those are things we're going to help you with. The next thing, once we have all this information, now we've got a snapshot. It's got to be accurate so we can give accurate information, but we'll have an accurate snapshot for you of what's going on. The next thing we start to look at is your cash flow. So we look at, not many people like to think of the term budget, so we do use cash flow. It sounds a little nicer. We're looking at your income minus your expenses. So now we've got to look at how much money you have coming in on a monthly basis, how much money is going out. So we're going to look at your fixed cost, we'll look at your variable cost. So we'll try to help drive down the cost of what's going out and drive up your income as much as possible, whether that means working a second job or fill-ins for some optometrists. We see that a lot. You work a Saturday, make an extra $500 to $1,000 a month, depending on how many you work. But we want to get that budget worked out, and we want to have your net income positive. We want to have this to be a positive number. We want to see that means more money is coming in than is going out every month. That is a surefire way to start building up that net worth up here, is having more money coming in than you're spending. So that's a great way. Start with some basics, start with your budget, start with your, looking at cost. What can we reduce? Cash flow, can we get extra cash flow coming in? Start driving that net income to be positive month after month on a regular basis. And then we start to flow that into how do we grow our net worth.
Hey guys, my name's Alyssa with Prudent Financial Planning. If you like the content we're showing you, go ahead and subscribe to our channel down below and like our video. If you want to take a deeper dive into your own personal finances, you can also click our website link below and schedule a free initial consultation to get started. Thanks.